With world-class expertise and local insight, Dexus creates value, not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Wednesday afternoon, and welcome to the COB. I'm Nadine Blaney.
And I'm Juliette Sarli. A very shortened trading week, so we've only got one more day to go, but the rally, if you want to call it that, continued today.
Yeah, is it a bit of relief, or is it just the calm before the storm? Well, of course, we get to see, but if we look at what's happened out there on the market today with the COB Australia Index finishing lower, so quite a bit of selling as we tracked toward the end of this session. So look, we still do have the last of the day's trades going through the S&P ASX 200, but you know, the futures are still coming under pressure in the United States, and we've got some pretty heavy selling happening across the Asian region. I noted the Hang Seng earlier today was off by about 2%. Well, it's now down by 2.6%. So yes, Juliette, we did have data coming from China. We did have first quarter GDP growth beating expectations, but everything has this big dark cloud over it.
Absolutely. So I think that means that a lot of our themes of the day might be out the window now, because it did look like we're having a modest rally, but as we've seen, we have sold off into the close. A lot of the weakness coming through from energy. So do you have that 3 p.m. energy slump? Certainly the weakness in some of these oil producers weighing on our market. And as you mentioned, despite that beat with the headline figure, there are still a lot of concerns about China's economy, particularly in the wake of the effects of the trade war.
Yeah, so a sea of red across the Asian region, setting the European session up for losses. Of course, when we look at the miners, it's such a big chunk of the market here locally, and you've got Rio down by 2.6%. It was out with the production update as well. Fortescue down by 2.7% to $14.89 a MinRes. You know, still on the front pages. We've got board members stepping down, and the share price off another 8.7% to $16.63.
All right, let's have a look at that energy sector. As I mentioned, quite a bit of weakness coming through there, with the exception of Amplitude. We also, of course, heard from Ampol today. They touched on the fact that their Lytton refinery was offline for about 10 days due to Cyclone Alfred. The overall production in the quarter down by about 6%.
Not ever quite sure why Amplitude Energy is on that page, but we'll figure it out. Hey, look, let's look at a sector that is doing well today, and that is gold, of course. If I can have $1 for every time we've mentioned gold moving higher over the past year and 4 months, yeah, I would be able to buy an ounce. I got to hold a gold bar one time. It was pretty incredible. It was very heavy. But I should say that a special mention should go to the banks as well, all of which, at least in the big end of town, are up above in positive territory, save for Macquarie Group.
All right, let's have a look at some of those corporate stories as well. Rio, you mentioned flagging iron ore shipments expected to be at the lower end of its guidance, producing around 70 million tonnes in the first quarter, and that was the lowest first quarter since 2019.
So Bank of Queensland had a good day today, up by close to 5%. So it's looking toward higher margins in the second half of the year, and it's talking about an improved Australian economy.
Iluka also had a quarterly update, increasing production by a modest 1% in the first quarter. Shares down about 0.6%.
Ampol, so this was featured on the call today, as was Macquarie, I should say. But yeah, Ampol was put into the AusBiz Fantasy portfolio last month, and today down by 3%. So Nathan and Henry, both investment committee members, were here, so you want to watch that episode to look at the polite sort of banter going on between the two.
And Genesis Minerals, they're up 9%, record high upbeat quarterly production.
WiseTech, new board, new role I should say in its board, Chief of Staff and Deputy Chief Innovation Officer. Interesting that.
And New Zealand did well, despite saying full-year earnings guidance has been negatively impacted by lower compensation from this ongoing, tit-for-tat with its engine manufacturers.
Abacus Storage says it is actively considering a takeover from Kai Corporation and Public Storage as well. So M&A in that space, really active in that space, actually.
And Pinnacle Investment had a broker update from Jarden, maintaining its overweight despite the recent sell-off. Mark Gardner, Wednesday guest, hello.
Good afternoon.
From MPC Markets. We were talking about this off air a little bit, and I just saw this headline coming up from the AFR. Trump's crisis only just beginning or make you question everything. That's something you've been saying for a while.
Yeah, look, I think obviously he's had to backpedal, and that was where I think this time last week, we were saying we were buying on the Monday, and I remember Nadine said, well, why are you buying now? It's because, one man changing his mind or reversing, could actually turn the market round, which it did, which is a little bit of luck, a little bit of good management on our behalf. But the bottom line is, it's not a pandemic. It's not something that's going to freeze up global trade for forever. Due to something unforeseen where we need a vaccine or something like that. So we were down 20% at that stage. But look, he's just going to continue to backpedal, I think, overall, because China, as I said last week, they are holding on the cards here in terms of the critical minerals, in terms of the supply chains, in terms of the manufacturing. We've been talking about that for months, really. And I think you've got to remember, Trump's been involved with 6 companies since 1992 that have actually gone into Chapter 11. And they've all been because of excessive debt, aggressive business tactics, and poor management. But he gets to walk away with Chapter 11. This is the American economy and the global economy here. He doesn't get to walk away, and he's using the same tactics. So I think it'll dent confidence in the US, and I don't think we'll see that. And I wrote in yesterday's newsletter about this. We'll probably get a little bit of a lull, and it's already quietened down, but we'll probably get a bit of a spike in retail sales because there's been some panic buying in the US. He'll wind back some more of the tariffs. Obviously, Nvidia today's taking a hit in the aftermarket, down 7%, which is driving us down. But we're still a good, I think, 15% from the lows last Thursday. So in the scheme of things, it's not that bad. It's not as bad as what it was last week. But I think the Doge job cuts, which are at least 300,000 at this stage, with a view to being nearly 1 million. There was talk of 2 million, and then obviously the tariffs are going to start pushing inflation higher. So we're more so looking at possibly just sideways to grind higher, and then we'll be very much closely watching those economic numbers in the US to see. If you're a business in the US, how do you plan at all, basically, not knowing what regulations are coming, what tariffs are coming, where you can buy your goods, because he might have an ideology of where this should go, but let's face it, they're a long way from building manufacturing plants, even if they had the expertise to fill the roles to man it. So, there's going to be some more turbulence, and probably around the middle of the year, I think people will start to be concerned about, not about Trump, but about it'll be the knock-on effects of how much he's dented confidence in the economy and then the sentiment. So, not to be doom and gloom necessarily. There are good spots in the market, but being long gold is. I've been sort of describing it as I'm probably more bearish US dollar than I am positive gold, but that's how the world reflects being bearish US dollar these days, is by gold, because Euro's not a great alternative. Outside of that.
Okay, so Nvidia, and it's because Washington has issued new export licensing requirements for Nvidia, AMD, those chip makers. Nvidia is saying that it's going to be building factories in the US. But when you see Nvidia down by a further 6%, is there any value in some of those former high-flying, and still high-flying, if we're being honest with ourselves, US big names? Yeah,
and I've been initially, when the AI bubble was inflating, I went back to the example of Cisco.
I was going to say, you were talking Cisco then.
But Jensen's actually been very mindful of not being another Cisco. He's actually said that. Their business model is much more solid than what Cisco's was back then. I don't see the AI bubble is going to happen in companies which are sitting on hundreds and hundreds of billions in cash. I think Nvidia is definitely a buying opportunity, but again, I know I keep harping on about this, but you'd probably just dollar cost average over the period. Trying to pick the bottom is a fool's errand realistically, and you can kind of approach a little bit glass half full, because if you buy some now and it drops, you can look at it and say, oh well, at least I didn't buy them all. If it goes up, at least you're in the money. And managing your headspace in these periods where you can be prone to panic, because the media and markets are moving at such rapid rates that you don't want to make a mistake. So plan them out. But it's a great long-term company buy. I mean, you could get somewhere in the 80s last week. I mean, it's back to 100 now, but I think just buying somewhere in here. Their forward PE is only 22. Like, you're getting one of the best growth companies in the world at 22. I think you're shopping in Australia, you probably have to pay 40 forward PEs. So, albeit that I think there are some bargains on the Aussie market as well, but just leave some cash in reserves to.
What are the bargains here?
We've been buying. We bought CSL, WiseTech, Goodman Group, a couple of ETFs as well. We switched out of physical gold into the gold miners, and then we've probably still got about somewhere between 20 to 30% left. And we bought a little bit of US tech last Wednesday, which again, I'm not, as much as I'd love to claim that was a genius move, it was a fair bit of luck rather than. But having the plan in place to be buying when they got to those prices is what made that situation. That's how you get lucky, basically, instead of making it up on the go.
So we talk a lot about gold. Just looking at Rio's quarterly iron ore shipments and how that was the lowest in 6 years. What is the overall iron ore picture telling us at the moment as well?
There's a lot of fear, but I really think that China's had better than expected GDP numbers today. There's going to be more stimulus. I think that, realistically, the last boom in iron ore was really domestic construction for China. So if they go down that path again, I don't know how much of the US is really, will have too much of an effect. I sort of think this will eventually calm down. We've just got two very stubborn nations at the moment. No one wants to yield. No one wants to pick up the phone first, which is a bit ridiculous. If they were my children, I'd tell them to grow up. But they're sitting and waiting, and in the meantime, we've just got to wait. But it doesn't benefit either side for this to continue. So I just see it unfolding. Over time, someone will have to give an inch at some stage, and then we kind of move on. But I think where the consumers now and the US economy, which is the engine room of the global economy, I think confidence would be pretty low, and you've got to watch that bond market as well, because if the US's leader is showing such irrational behaviour for an extended period, if Japan or China wants to get out of US bonds, that's going to cause their debt problem to spiral further because they can't refinance.
Yeah, okay, so we are here and we will leave it there with you, Mark. Really appreciate your insights from MPC Markets.
Thank you.
Bit of late breaking news, Juliette. Paladin Energy is saying that it will defend itself against a class action that was served today in the Supreme Court of Victoria. The class action alleges that Paladin made misleading statements and contravene its ASX continuous disclosure obligations between the end of June and the 11th of November. So Paladin saying that it intends to strongly defend the claim. The share price ended down by 4.6% today.
All right, well, let's get back to the stock of the day. You were, of course, on the call, and you had a look at
Stars.
Yeah.
Has the star fallen or has it been reborn? Henry Jennings from Marcus Today, Nathan Samsundaram from Deep Data Analytics.
That is probably a pretty good result, all things considered. So, but if you were looking at this new, I still think it could be a bit of a binary outcome, and maybe it's really at the beholden. It's up to the New South Wales government. There's still fines to come as well, so it's not an easy situation.
So too risky, you'd avoid it.
Well, as an investment, I don't think this is an investment grade stock, really.
It's not investment grade. It hasn't been for years. It's a punt. You're basically taking a risky punt. You lose everything, or you could make a lot. But that's not investment. So we haven't looked at it for I don't know how many years, and I'm still not looking at it. I remember back in the day, the argument was because of what it does, it's kind of like a utility infrastructure play. But that theory has been shot to pieces. So the reality is, it's got huge risk.
So too risky unless you want to just take a punt. But in that case, why don't you just go to the Star? Do it like that?
Absolutely. I was at the Star last night, not gambling. I was seeing a show. But nevertheless, let's have a look at some of the leaders and laggards. Zip had a very good session today on the back of an update, up 18%. Still seeing all these gold players like Bellevue, Ramelius look good today. And Genesis Minerals we touched on earlier in terms of its update hitting a record high.
Yeah, okay. Mineral Resources, though, opposite end of the spectrum. Clarity Pharma down by a further 8%. So this one's been very volatile as of late. And just to remind you, we saw the first patient treated yesterday in the phase 2 cohort expansion really send its shares higher, but giving that back today. Perpetual is down by 8%, Whitehaven Coal, and Nurin, keep in mind though, Nurin was up by 20% a couple of days ago, so a little bit of give back there.
I think we had the CEO on yesterday as well. Meteoric Resources having a meteoric day in the small end of town, along with a couple of other players on your screen there, including WIA Gold with an 11% gain.
Yeah, interesting to see Australian strategic minerals, of course, the US and China battling it out over critical minerals right now. Imugene, a second day in a row, down by 10.7% to just 3 cents per share. Orthocell off by 7.2% to $1.35.
All right, tonight we have US retail sales for March, also the NAHB Housing Market Index for April, home building sentiment expected to dip, and Bank of Canada.
Bank of Canada interest rate decision expected to hold at 2.75% as they assess the impact of Trump tariffs. I don't think that's any big surprise. You know what I did today?
What?
I voted in the Canadian election.
Wow. I was about to ask you, what's more annoying, me saying A every time Bank of Canada comes up, or calling vinyl the Tinder of the music industry? Or are they both tied?
Equal.
Okay.
Yeah, okay.
Tomorrow, we have the jobs numbers, of course, very important for March, and some quarterly reports, including big ones like BHP and AMP.
Yeah, we're in that season where we'll hear from all of these miners. And don't forget, we get quarterlies from a lot of the smaller companies as well. Zip is a good example today. It improved its guidance. That's why it saw that big jump. And we also get some of those quarterlies from Australian companies with US exposure that are also listed in the US. So ResMed comes to mind. It reports next Thursday, and we will be speaking with the CEO, Mick Farrell.
Oh, I love Mick. All right, we are seeing the market pretty much unchanged on the close rather. It's not quite the open. Got a bit of sleeping before that, but the ASX 200 down 3 points on the close to 7,758. So certainly some selling in the afternoon session amid, as you mentioned, that weakness that we're seeing in Asia.
Yeah, real weakness in Asia and US futures. So NASDAQ E-minis obviously reflecting NVIDIA down by 2.25%, S&P 500 E-minis off by 1.4%. So I dare say the tech names will be in for a bit of at least a bruising start in New York.
All right, well, I'll be joining you early in the morning. I'll get to see what Wall Street does, filling in for Andrew. So we'll see you from 9:45 a.m. Eastern.
See you then.